हेलो 1 2 3 4 5 6 7 8 चेक चेक नमस्कार आप सबका स्वागत है अशोका होटल फाइनेंशियल समिट में
And what else could be systemic access to suitable and adequate credit to this segment? I warmly welcome the moderator for this session, Retail Finance Products, Credit Access Grameen. Please have a seat. I would also now like to invite on stage our distinguished panelists for the session, Ravi Tyagi, Chief General Manager, SIDBI. Abhishek Swarankar, in charge, Credit Card Product, National Payments Corporation of India. Vijay Shetty, Executive Vice President, MSME Lending, Axis Bank. Firoz Anam, Chief Risk Officer, Credit Access Grameen. Vipul Mahajan, Head Commercial Business, TransUnion. Thank you so much. I will now request Mr. Sundar.
But we'll try to keep you awake. We are here to discuss one of the important segments of the country, MSME, micro, small, medium enterprises. For any country, MSME is a critical part of not only the economy but also the social fabric and the cultural fabric of the country. For our country, MSME contributes close to 30% of the GDP. We still, like Dr. Raman sir said in the morning, still way far behind in terms of how much MSMEs can contribute to our GDP. As we are looking forward towards becoming a 5 trillion country economy, this number should go up to 50%. And for it to go up to 50%, the MSMEs have to get capacitized. MSME as a segment has a wide range of challenges. Today, we'll specifically talk on finance, financial services, financial inclusion of MSMEs. And even within MSME, which is a very large segment, we will spend a lot of our time talking about So what we'll do is that I'll start with Vipul. So Vipul, we did a round of introductions already. Okay. So Vipul heads Symbol's commercial business. So Vipul will kind of lay the landscape for MSME credit in the country, which will then help us to have a in-depth discussion on where we are today, where we want to go, how do we get there, and what's the plan from here. So, Vipul, take us through.
Sure. So, I'll try to be brief in my presentation given the shortage of time. But it's a short presentation. It basically will help us set a context in terms of what the market is all about and how that market is actually progressing. I have been working with small transition channel to khali kara screen
on करना
So, short background about me. I had the commercial business and what that basically means is anything and everything to do with MSME, commercial credit, that actually ends up playing a role. It's something that I participate in. And most of the insights that I would be presenting, actually a large part of the insights that I'm presenting, is outside of the database of CIBIL. So all the credit given in the country to the MSME segment is what we will actually look at. How is that moving across the ecosystem? So it's all credit given by large public sector banks, private banks, NBFCs, RRBs, fintechs, the entire ecosystem to be specific. First, just to set the context, I think this number most of you would have seen since morning here, right? That what Sundar also just spoke about, contribution to GDP is about 30%, right? And what stated goal of the government is to take it up all the way to 50%. And truly, if the country has to grow, if India has to truly become the next $5 trillion, economy, MSMEs have to take the pole position to go towards it. But the other side of the conversation, which is the theme for today, is that what's their footprint in the financial services space? Footprint on the financial services space has been increasing at a very rapid pace. Against 6.3 crore stated MSMEs number in the country, we have roughly about 10 crore, or so 6.3 crore is actually slightly old. It's a 2015-16 survey number that we refer to. 10 crore odd current accounts. If you have to base banking as a surrogate to see the financial penetration in the country, 10 crore is the set of current accounts in the country. GST penetration is roughly about 15% of that, about 1.4 crores is the GST penetration. The number of companies who have ever taken credit, and this number is the number that we are able to track because in CIBIL we have information about all the MSMEs in the country. It's about another 3 crores. These 3 crores ever taken credit make up to about 27 lakh crore worth of credit outstanding in the country. 27 lakh crore, to put it in perspective, about 3 times of the loan is a loan given to the large corporates. And about 2.5 times of this loan is all the retail loans in the country. So 27.7 lakh crore worth of credit to MSMEs is a fairly large, credit delivered in the segment. Now, breaking that further, MSME is a big word. Like Sundar was alluding to earlier, micro, small, and medium become very 3 specific segments. Micro, as the definition of the ministry and the regulator, is up to 5 crore turnover. Small is up to 50 crore turnover, and medium being up to 250 crore turnover. On CIBIL side, we don't get to see the turnover, but we get to see the credit exposure. And roughly credit exposure to turnover is about 20%. Applying the same rule of the 20%, the similar numbers on the credit exposure of up to 1 crore, small up to 10 crore, and medium up to 50 crore is what has been applied here to be able to look through the presentation. And what you can see is that bottom of the pyramid, the micro segment, is the one where most of the credit delivery is happening. The inference of the slide is that there is 23% year-on-year growth in terms of the total credit disbursed in the micro segment, right? And which is fastest among all of the MSME subsegments. Let's double click this micro. This now slide talks about the further subsegment of micro into very small, micro 1, micro 2. Very small is loan size up to 10 lakh rupees. These are absolute bottom of the pyramid where most of the mudra loans and other intervention loans are actually driven in that very small subsegment of less than 10 lakhs. Micro 1 being 10 lakhs to 50 lakhs and micro 2 being 50 lakhs to 1 crore. This slide has a beautiful diagonal curve. What it is saying is that lower the size of MSME, higher the credit growth. More credit growth is happening actually in the bottom of the pyramid of MSMEs, and which is the way it needs to be because that's where the credit gap is actually highest. The previous number, if you noted, was 23% for the entire micro set. Within that double click, go to the bottom of the pyramid, very small. It's actually 34% growth in credit in that specific subsegment. Now I want to bring and shift focus to the theme of the entire day today of inclusive finance. Inclusive finance would mean that let's start reducing this credit gap in the MSME as fast as possible. The number that you're seeing here is the lending done to new to credit segment. How much of total credit given in the MSME segment is actually given to NTC? 61% is the number. So in a year, if there are 100 loans given to MSMEs, 61 are actually going to the company, to the entities which do not have a previous credit history in the bureau, right? Now this number of 61% within, and I'm speaking specifically to micro MSMEs, which is less than 1 crore exposure. This 61% is very different in the subsegment of very small micro 1 and micro 2. Very small is the subsegment, let me remind you, of exposures less than 10 lakh rupees. That's where the 61% actually jumps to 75%. So 3 out of 4 loans are given for the first time in this specific set. So as a country, if we want to truly do financial inclusion, we have to be far more open to lend to NTC. And the number shifts dramatically as it moves to higher ticket sizes. For micro 1 being 40%, and for the micro 2 being 16%. Now, who are these NTC MSMEs in the very small subsegment, right? These are primarily driven by public sector banks. About 64% of the credit given in this subsegment is actually given by the public sector banks. And the other key point, and rightly so, these are all deeper geography loans. So the SURU market, the semi-urban and the rural market, ends up contributing 2/3 of the loan given in this segment. 2/3 of the new to credit, very small loans are actually given in the SURU market. About 2/3 of the loans are actually given by public sector banks. And the top 5 states, which is Karnataka, Maharashtra, UP, Tamil Nadu, and Gujarat, end up contributing nearly 53% of the credit. And as you can see from the names of the top 5 states, these are the same names that you keep hearing from industrialization in the last 4 or 5 years. You would have heard different, units being set up in the same states, different, interventions are being done in the similar states. The trends change dramatically the more the time you move up the ladder, the more you move up to the micro one, which is 10 lakhs to 50 lakhs. The public sector banks are one of the major lending providers there, but it drops from 64% to 40%. Private banks actually start taking up a large part of the job to lend to actually this micro one subsegment. And so is the case with deeper geography. It's a fairly well spread loan. So these bigger size MSMEs, slightly bigger size, the micro one set, are fairly well distributed among lenders, among geographies, and among states to be specific. And coming to the last of the micro two, which is the biggest MSME, 50 lakh to 1 crore, is the biggest set of the micro MSME set. That's where the private banks are actually the biggest lenders to be specific. And metro markets, obviously so, are the ones which are driving growth. But the focus that I want yours to be on, a key point is that if on the left bottom chart you have been noticing, which is the turnaround time, how many percentage of loans are given within 15 days? It's fastest in this segment. So, as a country, we are underwriting the bigger size loans, micro 2, which is 50 lakh to 1 crore, faster than a loan that is less than 10 lakh. Why? I think that's a point of discussion which we should have, and that's where the information asymmetry in different segments can actually be brought down to lend faster to that specific segment. How does, these are the last 2 points. Since we spoke enough about the credit growth, it's important to look at from the risk perspective too, how the risk is being managed. These are point-in-time delinquencies, how the delinquencies are faring across the board. Delinquencies are reducing. They increased during the COVID times, but now they are below the pre-COVID levels. B, while we speak about the very small being the fastest growing market, it's also one of the riskiest, right? They are the ones where the delinquencies are highest. Therefore, the lending has to be far more cautious in this segment. And the C, and the most important point, again, if we double click it further, while at an overall level the delinquencies are reducing, but if you look at the early delinquencies would basically mean that you fix the point when you are actually lent and track the delinquency for the subsequent 12 months. So all the lending done, let's say in December 2023, and you track the delinquency in December 2024. You do the same exercise for December 2022 loans given and track the delinquency for December 2023. It gives you an apple-to-apple comparison. You lend a book, in next 12 months, how much of them actually become delinquent. That's what the slide is about. And what you can see is that the delinquencies increased dramatically during COVID days, but has been reducing since, but are still elevated to pre-COVID levels. So what we spoke about is that the delinquencies at an overall level are reducing, but the early delinquencies are still not back to the pre-COVID levels. Now, as at CIBIL, at TransUnion CIBIL, we keep trying to improve with new innovation in the space of MSME to keep bringing new things so that as the lending ecosystem, we can take advantage of the new data emerging to be able to lend to the similar side. One last point that I want to leave everyone here with, it's a concept of FitRank, Financial Income and Trade Database Score. It's something that we have done in partnership with SIDBI. It uses GST banking ITR, either or. Either any of the three or all of the three available can be used to come up with a rank. Rank is basically 1 to 10, 1 is the best, 10 is the worst. 1 will have the lowest probability of default, 10 will have the highest probability of default. It's a statistically built rank on a large set of MSMEs data. What I want to give you a key call out, we spoke about the concept of new to credit. This does not uses the core credit information. An MSME can have a bank account, one of those 10 crore current accounts which we spoke initially, and can get a fit rank, and hence lenders can make an informed credit decision while lending to that very small segment which is on the other side of high delinquencies. With that, I will close to summarize the key points. MSMEs are poised to become the largest contributor of the economy. I think we would have discussed that enough during the course of time. The credit to the bottom of the pyramid, which is the micro MSME and the very small, is growing fastest, and rightly so, because that's where the credit gap is actually highest. NTC contributes 61% to the total originations. Very small subsegment has 75%. 3 out of 4 loans given are new to credit and very small. The delinquencies are reducing rapidly, but we need to keep an eye on the underlying risk. And then FitRank is one of the new ways to help accelerate the credit flow to MSMEs. With that, let me hand it over back to Sundar for the conversation ahead today. Thanks.
Thank you so much, Navpur. I hope you all found that very insightful. So what we'll do is that I will kick off the first round of opening remarks from all the participants. Kind of give their take on where they think we are in terms of financial inclusion of MSMEs. Just high level, broad opening remarks, and then we can slowly start getting down into the details. Rohit, I'll start with you.
Yeah, good afternoon, everybody. So thanks, Vipul, for, I think, making the perspective very clear, the context very clear. The larger number of enterprises which require finance, are in the micro segment. So we'll just continue, no problem.
Yeah.
See, anyway, Indian banking system is a very well-established system. So if any of you, a lot of times you have complaints against the banking system that they're not giving money, this and that. But believe me, in the entire emerging world, not only emerging world, even in the developing countries, nowhere MSMEs will get credit kind of products that they get in India, across segments, right from the large medium enterprise to small enterprise to micro. Even micro, the poorest and the smallest people we have reached microfinance system should have done a great job. So we should be, first of all, very proud that as globally India is like looked out upon now, that how do we follow their model, number one. But we still have problems that, MSME, we talk in the same breadth, but they are very, very different segments. And today the biggest challenge for the country is that there is, people say that rich are getting richer and who are stagnant or not that speed. That's the same thing in businesses also. The businesses, big businesses who have access to high quality debt, equity, keep on growing. But the smaller will have some challenges. The informal are the ones who are at the most disadvantage. So while we talk of this 10 crore people, 10, 7 crore people. Numbers, we don't know how much are the numbers. If you talk to MSME ministry, they say it's a 6.3 crores, but that's a dated number. So SEBI has created a first repository for informal, which has just started. So over the next couple of years, hopefully we will first of all know how many informal enterprises are there. Now these are the enterprises, I think, which qualify for a missing middle definition, which is the topic of the session. Just imagine that microfinance can give 20,000, 30,000 to, let's say, a small tea stall with somewhere in tier 3 or a small car workshop, tire shops that we see. Now, some of them are aspirational. They want that 2 lakh loan or 3 lakh loan to probably move to a better place, a fixed place, give some deposit, get into a shop. That's the loan which is very difficult to get. That nobody is giving because MFIs don't give it because they have their segment and their regulatory boundaries. And the formal system also struggles. The big banks, while they are going down continuously, to reach to that level, which still does not have, while UPI usage is increasing slightly at their segments also, that QR codes and everything, but still very difficult to assess them. There's a lot of cash economy still there. It's very difficult to assess them. No GST, no balance sheet. So it's hard work. And hopefully, from SIDBI's perspective, we want to challenge that segment. We want to challenge ourselves in that segment. Can we give a loan of 50,000 to 5 lakh rupees to that segment? Maybe directly with the help of partners. So we have started a Prayas scheme, which is in partnership with MFI and corporate VCs. We are trying to give very small value loans and also give them at proper affordable rates. See, 20,000 rupee loan economics is different. Probably there is a justification for a higher interest rate. But once you give a 2 lakh loan, 5 lakh loan, it cannot be at the same rates. The rates have to come down for the economics of that type of loan. So this is what I think is the biggest ecosystem which we all need to just put our lens on and focus. And I'm sure solutions will emerge, everybody, because it's also business. It means business, whoever keeps on tracking it. Every bank is going down the ladder, I would say, to those segments. But that segment has unlimited appetite, highly aspirational. We can just judge by the thing that still about 80-90 crores of population supported by some food grade thing. So there is a segment which is living on very low income. A lot of them are doing very, very small economic activity. And now how do we use all this digital rails and new technology, API, digital public infrastructure to really feed them some little more aspirational doses of credit, which support them, which are given to them in a proper manner, in an informed manner, with proper education. That's what the country requires at present.
Absolutely, sir. I think the point that you mentioned about India being at the forefront of many developing countries. When we have spoke to people in Indonesia and other developing countries, they are at least 10, 12, 15 years behind us in many ways. So, though we have a lot more things to achieve, I think directionally we are on the right track. Abhishek, your take on where we are.
So first of all, very good afternoon to my fellow panelists, so the moderator and the audience sitting here. So I come from an organization called NPCI, National Payment Corporation of India. Before I ask you that question, I would like to just give you a brief about what we do as NPCI. So NPCI started in the year 2008 by the aegis of RBI and IBA, Indian Banking Association. And what we do, we create a digital ecosystem. So our responsibility is to create digital ecosystem, digital payment ecosystem for consumer as well as for MSMEs. So in that sense, we are enablers of digital payments. There are multiple things which at NPCI which we are doing. For example, if I talk about various instruments which we have, business B2C, business to consumer. So there is a RuPay, which is an Indian homegrown scheme. One example, we are talking about financial inclusion also here. So when RuPay started in the year 2012, there were only 56 banks which were issuing debit cards in 2012. And today there are 1,250 banks are issuing debit cards with RuPay. So that's what I'm saying. So, whatever happens in this country, if we want to do it at scale, we'll have to, the entire ecosystem should come together. There is another thing which is called UPI. We all are using it, I believe. And the total transaction on UPI last month was 114 billion. Which is more than the population of the world, right? And you won't believe 80% of the digital transaction in India is through NPCI. And another thing which I'm very proud of, and all of us should be very proud of, is that around 48 to 50% of digital transaction in the world is happening in India. So that's a very, very, it's a very strong statement. So what I'm trying to tell you here is that there is a missing credit here. Digital payment is a solution wherein we need to make things little easier for the MSMEs, for small businesses, and that can only happen if they also come on a digital payment bandwagon. Largely, the UPI story is a consumer story, but if you see the number of QR codes, so there are more than 350 QR codes across. There are 70 million merchants who are already on QR codes. So in case any MSME wants to make supplier payment, he wants to make payment to the wholesaler, UPI can also be used, right? Recently, there is a credit card on UPI also which we launched, wherein now a credit is also there on a UPI. So a merchant card or a MSME card, a person can make payment to supplier also through UPI. There are some of the things which I think which we are trying to create along with the banks, along with the ecosystem. And I think the solution to the problem of credit for MSME is to become more digital, using the technology, using the tech know-how. That is how we have solved it for the consumer business. I think the similar thing is required for the MSME small businesses as well. That's my take.
Thank you, Abhishek. I think all of us are proud of NPCI. I mean, we go out and we say that, we have this organization which created this UPI concept. We see prime ministers and other world leaders paying through UPI when they come to India. So I think we're all proud of what you guys are doing in NPCI, Abhishek. And we are looking forward to how digital payments will finally, bring credit inclusion more as well. So we'll talk more on that. Vijay, from your side, being a banker, there's always this, question that, obviously you manage risk, you manage public money, so you have to be extremely cautious in terms of, how you lend. But from your perspective, do you feel that, we are at a point where we have enough things on the ecosystem side, we have enough things that can help us press the pedal on MSME lending, small business lending? What's your take on that?
Okay, I manage small business banking for Axis Bank as well as the commercial banking group. Just to give you a perspective, in 2016, we started small business banking. I started it. The reason for starting that unit is normally in the banking, it's always taken care where people are talking about the small and medium, the segment. The maximum penetration is there in the nationalized bank and private banks. The bottom of the pyramid is focused on the NBFCs. So when we started 2016, in MSME, it is no one fit policy doesn't apply. Normally in the banking model is like you get a balance sheet and underwrite. Those matrices are used for evaluating the customer. When it comes to this micro and below that, the problem is they don't have a transactional histories as well as the formal paper documents. That's where normally the banks or NBFCs, everybody, get to underwrite those customers. It's difficult to underwrite. So for that, I think what we did in terms of underwriting this customer, there are multiple methods today in the score model is available. That's one of the reason we started in 2016. We could grow in a CAGR of 50%. That's a 52,000 crore book. So that is the opportunity is in India asset. When people measured about the current account, number of current accounts around 10 crores. But actually, when you go to the bottom of the pyramid, they don't maintain current account. They maintain saving accounts. If you see, go and underwrite on the saving account model with respect to the Mudra loan, it will be at least 3x of that number. That's the difference between that bottom of the pyramidal and one uptick of the micro. So doing that today, I think after COVID, we could see that earlier the total registration is 1 crore of MSE Udayam registration. Now I think it's touched 3 crores now. And plus, it is just touched 3 crores. That's what I got the info, but 3.1 crores.
and also again the registration 6.5 crores, the total MSMEs. But what I foresee it is at least 10x kind of a number. Self-employed, who's there but not registered. But how do you reach them and underwrite? That is the question. Because of the digital print today, I feel that most of the fintech companies or the anchors or the e-commerce are coming up, and we could able to connect those dots. That's where I think the upsurge will come. The Indian market, when you say that 30% GDP to 50%, this is a one segment will contribute much bigger than that what we do it here. But everything comes on the formal sanskar. That's all.
Thanks, Vijay. Thanks for all along, right? So what do you think where we are, and directionally are we in the right direction when it comes to lending to MSMEs?
Sure. So, taking that kind of, cue from in Bipul's kind of presentation, let me frame the problem this way. So, what we are talking about is that we have got about 6.5 crore sort of MSME, right? Are they getting enough credit for their business to sort of, grow that business, right? Now, when I look at now when I look at the sort of the first question that why that gap between that this 7 to sort of I'm between 7 to 3.5, right? Is it that those people, they don't want to borrow from formal sector? They are probably getting their money from their friends, or there are a lot of community lending happens in the businesses. Maybe from there they don't want it, or is it that they want to come in, but for some reason due to could be access, or could be due to that they are not kind of qualified for credit, they are not sort of getting it. So again, when I sort of look at the further data, some of the Udyam registration data, some of the information they have to provide when you sort of do the Udyam registration. So you realize that out of that micro you're talking about, right? That micro, the micro, small and medium. So micro kind of, out of 6.5 crore, I think we are talking about 6.1 to 6.2 crore, they belong to micro, okay? And when you further drill down into the micro, by the Udyam registration data, you would see that about 75 to 80% have their turnover less than 10 lakhs, okay? So what we are talking about is a great majority of it, which are kind of bordering between whether they're microfinance or they're sort of MSME. There is a very thin sort of borderline, right? So it is possible that they are still getting into the formal economy, maybe through microfinance, right? So if that is the case, then the problem is that is more about the amount. So maybe the person that guy, he wants to borrow more to grow their business, but because certain regulatory constraint, maybe microfinance companies are not able to sort of give them adequate credit, right? So I think we need to kind of look at that problem from a risk perspective. I think if we look at as a risk problem, right, I think we have done very well as far as the microfinance sector is concerned. I think the unique social collateral model has been really be able to serve pretty much every village, every part of the corner. Wherever you go in the country, you would see that somebody wants to borrow from through a JLG model, its credit is available. There is absolutely no, unless the person really sort of has defaulted, exhibited some trend in the past, you would see the credit being available. So I think the question that to be solved is that sort of how are we able to give them higher amount of credit, right? And that is where some of the challenges that we have in the credit, because traditional credit is still based on the cash flow model, right? Where you try to understand the cash flow and see that whether the cash flow is adequate to sort of the person can serve the amount of loan the person wants. So I think, there are also a lot of informal method is there today. I mean, there are a lot of MSME lenders today who have come up with certain innovative models. Also, a lot of data has been available through which some of the kind of problem we are trying to solve it. But I think, that's still something in evolving space. And I think maybe we can later on, we can spend some time on understanding those, I mean, how different models have come across, how using that.
and Vipul was also mentioning about the FIT score, right? That how do you look at a bank statement? How do you look at a GST data? But again, I think the crux of the problem here is that the missing segment we are talking about, maybe they are actually very poor on the data side. You know, maybe if you look at at least my experience is that when you're looking at that segment where that is where even the banking history is extremely thin, right? So I think I think this space is going to get exciting because opportunity is very clear, right? And that is why there is a lot of scope for innovation out here. You know, that would be sort of my take.
Trying to look at data. In the last 4 or 5 years, do you see a lot more MSMEs or micro enterprises starting to get visible in the credit bureau, you know, especially commercial bureau? Because that is one of the important aspects, right? And within that, do you have a view on, you know, GST, no GST? Because I think Viral was spot on saying that, you know, visibility of these customers, data footprint is very, very low still, right? So what is your, you know, understanding of what has happened in the last 15 years?
Before I answer you, I have a question for the audience. Is the mic working or not? No, not working. So if it is not, easier for us. Sometimes it works. Easier for us. And one more thing I think which we guys kind of discussed beforehand is to have some type of Q&A towards all the panelists are very well industry and veterans who also benefit from at the end of the session to ask them. Now Sundar, to your question. Before I answer your question directly, I want to give a short brief of civil in this space of the micro and MSME and the MSME space. Because Trans-Union Civil is something that we typically relate with our own civil score, right? As that's our first top of the But just like we have our own civil score, on the other side of the house also, there are multiple different solutions available for the companies. As I said, 3 crores is the total set of number of companies who have ever taken credit in this country. And that's the database that actually civil ends up managing for all diversions. To answer Sundar, your question, 80% of them, actually more than 80, I think 80-85% of them happen to be the micro subsegment. And within that, another 80% of them happen to be the very the bottom of the pyramid. So in terms of the number of companies who have taken credit, that's the largest pie of the commercial bureau in Trans-Union Civil. On that, we have different solutions that banks and lending institutions and the MSMEs themselves can consume. Back in 2016, we had only one thing called Trade Information Report, where the MSMEs credit report used to come, where you used to have your past repayment, what working capital limit is there, what cash credit facility is there, which Mudra loan has been sanctioned and which other loans have been sanctioned. In 2017 came Civil MSME rank, CMR in short. That's just the same thing of civil score in the MSME space. Just that it's a rank output. How I showed you the FIT rank, one is the best, one is the worst. Progress from there to 2020, we came with something called the trended analysis, trade vision. It's a double click. I will not get too deep into it. But what I want to lay with you and the FIT rank that we just spoke about in 2023 in partnership in City, right? I don't want to get too deep into each of these product segments, but what I'm trying to say is that it's the same company. In 2016, there was only one lens of looking at it. Today, there are 4 different lenses of looking at it, more holistic 360-degree view. So, to answer Sunil's question, about 80% of this data is actually the bottom of the pyramid. Is it working now? Still no? Okay, for you to get the audio. No issues. Voice over later on. So, no, he needs for the video.
That's fine. That's fine. It works. So I'll just close. I'll close my point. Right. 80% is the smallest of the companies. 4, 5, and there are many more which I don't want to spend more time talking about it. Multiple lens of looking at the same information and getting more deeper and richer, which we will speak about during the course, right? Much more angles to look at it. It's just the start of the journey towards making MSME the new retail, right? Retail is a segment that all of us can today say that I can get a personal loan in a matter of an hour's time max. MSMEs are going towards that path. Yeah.
Great, Vipul. So, thank you for your opening remarks. MSMEs or small businesses traditionally has been very difficult to serve credit. And there are certain structural elements that have kind of constrained this part. So, so what I was saying was that MSMEs or small businesses traditionally have had structural challenges which limited them from getting access to credit. So, maybe Ravi sir, if you could, talk about what has been the challenges and what are still, some, elements that are still hindering, though we've made a lot of, positive strides.
Check. Hello, check 1.
Are getting addressed. The challenges were very, very complex because it's a very large country, very, very diversified segment. So it was really tough for the bankers. There were limitations to how much they could, how much large organizations they could create. They were able to reach the smallest of the customers. That gap was filled by the MFIs and the NBFCs who created niche segment focused business models that went out and started assisting. Now there are partnerships happening with NBFCs and banks. So that's one of the biggest thing which is happening. The NBFCs today, let's say there will be an NBFC which will focus on something on e-commerce only. And there will be an NBFC which will have some agri-linked specialization. There will be an NBFC which will be doing so many things. So they can export, there will be steel, especially manufacturing. Now the key challenge is these NBFCs have limitation of capital. And because of that, all of them also must be the cost of capital. So it's capital also, so that limits to how much they can lend, and also cost of capital, so their end kind of lending becomes costly. So this was a very big challenge which was also discussed in the plenary session. Kamal mentioned very high cost lending can also happen in the informal sector, which is not very good. I mean, there is some minimum cost which is there, but exorbitant costs could, increase the risk of indebtedness and kind of debt traps for a lot of informal people who are borrowing, but they're not understanding the full implication. Multiple sources, business loans are being given by multiple NBFCs. So therefore, the partnership model which RBI has brought, and now it's slowly starting to mature, where NBFCs tie up with banks who have very large, capital, low cost of funds, but they don't have the reach. So I think this is a perfect model which will grow in the future, especially for the missing middle and micro segment. Maybe Axis Bank, I think, is trying to do a lot of things themselves, but still there is a merit for all of us simply because we don't have reach at all, but we are doing partnership lending with institutions like us, many more. We have given loans of average 2 lakhs to 1.5 lakh micro enterprises in last 1 year. I think this would have never been possible for an institution like us with more retail presence. So this is definitely one big area, which was a challenge which is getting addressed. Number 2 is, I would look at it as a challenge, serious challenge is that, how to educate the micro segment. Because, they're not, they're very vulnerable, I would say. Because, there's so aggressive selling happening to them for digital products, everything inundated by digital offers on their mobiles, somebody walking in, giving them. They don't understand too much. Somebody will sell them a loan which will look very, very good for immediate basis, but then it becomes a habit if they're not thought through and not understood the product. So that's one challenge I feel, and a lot of them will not even understand what's happening. That's another problem because some aggressive that as a system we need to address. It's a very critical thing because that I see as a challenge. And third challenge that we are seeing is that digital is happening. Because of all this PDI and digital rails that have been created now, available to all lenders. Right now, I would say the lenders are at stage 2. First was just understanding what's happening. Now, most of the lenders have some products built on these rails. But there's still a lot of friction in the lending ecosystem. In each bank, in the large banks, small banks, institutions, the products are not completely digitally, I would say, very working in harmony with it. There are too many kind of, tech pieces lenders have put together to deliver credit. But they need to improve a lot. So there's a lot of kind of, I would say, rough ride happening within institutions, and I see within the next 2 years to 3 years, mature digital lending happening. Right now, because people have put together, it's not end-to-end. Sometimes it's not very good for the borrower. Sometimes you remain in dark on some of the things, but things are getting better, and I see that going forward, this challenge will emerge as some better solutions for lenders also. The next 2 to 3 years, this is one of the key challenges. The lenders are also struggling. There's a problem of FOMO, and I should not miss out. Some other bank is digitizing faster than me, and that process sometimes can take you in the wrong path, in kind of creating problems for your own system. So I think this is a challenge from the lending perspective. From a borrower perspective, I think the time is best times. If it's a medium enterprise, if they want 50 crore loan, 40 crore loan, lenders will fight for it, but it has good track record. For small borrowers who need 5 crore, 2 crore, 10 crore, if they have track record, there is a lender's kind of line on their toes. It's the micro also, there is a kind of a high competition, but that's where NBFCs are getting in, and there's different kind of products being sold. So I see that as a systemic thing, but overall the country is moving in a very good direction. Very sound banks, very sound digital rails, very sound digital public infrastructure, very sound credit bureaus. You won't imagine a country, one of the best countries, African continent is South Africa, and they don't have a credit bureau yet. It's very difficult for us to even understand that they said we don't have a credit bureau, and that's our biggest problem. Just met somebody recently. So we are very, very far ahead. Our system is very mature, and it's the best will come out of this.
Sure. So now, touching on digital and ability of digital to kind of deliver faster products, better products, along with the literacy issue that we are seeing also, Abhishek. So, what's your take? Especially you, NPCI is actually our kind of our platform which helps us to drive digitalization, and you lead us from the front. So, how do you see us, moving forward, and specifically to segments which are tier 2, tier 3 city, little rural? Do you see them, coming, moving along on the cashless piece? Do we see that as a long tail? So, what is your view on all these things? Because most of the micro enterprises are there.
So, there are a lot of challenges, and I believe, but those challenges also have their unique solutions. So let me take some examples here. Ravi sir rightly said, financial literacy and digital literacy is very important. So India has leapfrogged as far as digitization is concerned. India has one of the cheapest internet rates. We are used to now making digital payments by UPI and other modes. So India has leapfrogged as far as the digital payment is concerned. So, but I believe with that also comes responsibility of creating a digital and financial literacy. But because of this digital payment revolution, I believe there is an opportunity also for small businesses wherein they can use this digital medium for selling their product as well. So by maybe creating a website, by maybe using a WhatsApp tool or something. So digital is helping either getting them a easier cost of funds. Also they can sell their product through digital means. So that's one. Secondly, I also believe there are certain platforms. ONDC can be a very big example here. Along with ONDC, there are other marketplaces as well, wherein these small businesses are already registered and they are already selling. So this is bridging the gap between where they are physically present and where they want to sell their product. I think ONDC has, and similar marketplaces has a huge potential. they say that it has a potential of reaching up to 500 million touch points. So that's there. You know, another very important piece is a fourth industrial revolution, which we call it. It's like a AI and ML revolution which is happening in the country. And you know, I believe this is not only for large corporations, it is also true for the small businesses. Businesses which is in tier 2, 3 cities and tier 4 cities. So utilization of AI, ML, that is also very important. Along with that, I believe, you know, at the end of the day, there is a goods which gets transferred from place A to place B. So logistic is something which is important, because I was reading somewhere around 13% of Indian GDP is spent on logistics. So I think that is also something which is very important, and streamlining that, government has made a lot of policies around it. So that is also something, and all of this put together along with the digital payment infrastructure, I believe access to credit, all these five put together will provide access to credit to the small entrepreneurs, small businesses across. So as I said, there are challenges, but these challenges are also opening up a lot of opportunities for small businesses across.
Do you think cash will reduce further in small towns? I know it's a difficult thing to answer, but you know,
So I
I don't understand what's the thinking in NPCI.
So you know, what we envisage is a less cash society.
Okay.
A cashless society, I think it's difficult to achieve, but less cash society is something which we should aim to achieve. There are so many digital mediums by NPCI and by other ecosystem as well. And I believe the way to go is less cash. You move towards digital payment infrastructure, you move towards other means. There are card schemes in the country, there are other means as well. So I believe the way to go is less cash, wherein the circulation of cash is less, people move towards digital payment. But I don't see that cash will be there. It's just that I think the quantum will decrease, but I don't see cash will go down in the country.
So Vijay, all this is helping you to, you know, get
If the less the cash, bankers are happy.
happy.
Because you will have more to lend. It will be coming to the banking system. Then again, it moves to the other hand. So that it's a cyclic nature, right? So if you create a money, it's everywhere it circulates. If it's cash, it's stacked somewhere else. It's not useful. So I think when you see that if the cash comes down and the digital prints moves up, and D2C comes from tier 3 or rural area able to sell in the e-commerce market, then the whole ecosystem where lending becomes much easier, right? When we say that partnership, it's not only co-lending as NBFCs are going there, it is also the industrial units, the corporates or e-commerce. All these having a data points in terms of the transaction. It is not only a business transaction. It can be their individual transaction can also help us to underwrite the customer. Today it is not how much turnover is only not criteria. Buying power, how much he has, what kind of a buying payment he is making in the e-commerce, that also matters on the scoring, right? So all this information comes there, then you underwrite the self-employed customer, then I think the whole thing will change completely on the micro and mostly on the bottom of the pyramid segment.
You already started to see some of these models playing out, Vijay?
See, in our bank today, we do almost 600 crore monthly disbursement in STP with 3 minutes, and the average ticket size of 3 lakhs to 4 lakhs. So that's the business volume happens. Also, we have a tie-up with few corporates. We underwrite on journey through their platform, in-house journey, where we underwrite based on their score plus our credit model, we underwrite them. So it started recently, almost 6 months back on the segment which is on the small ticket MSME customers. It's evolving, right? It's important. We know that there is a risk in terms of when you do a NTB customer where you don't have any history. He's a KTB for us. We know that customer, but directly not by us, by some partners. So only one thing, I think it's very important how risk models are brought in, how you really analyze those risks, how fast you do it, how fast you're able to take a corrective step. that matters the most, because always in good times, always we take a bad decisions. Yeah.
Yeah, yeah. So I think I think if we look at the space, right, and see some of the models that is there, which is trying to kind of address it. So the obvious, I think industry found the obvious solution in terms of first doing a secured loan. So if you have a security, you have a house, you take it. I think that is how you say that okay, this is the best solution. But the problem with that is that obviously the time you take is very long, right? You have to apprise the collateral. You know, there are a lot of associated problem with the ownership of the collateral, valuation of the collateral, and it takes a lot of time. So again, it's not a very efficient sort of method to sort of do it. The second method, which is getting a lot of traction, is we call it still a cash flow method, where a lot of focus into understand the industry. So for example, if you look at the sector really broadly, you would find that all these MSMEs, they are mainly into retail trade, which could be retail trade, wholesale trade, some of the agri-allied, and then some manufacturing. So these are the broad few industries which you kind of see in this MSME sector. So if your understanding of the sector is very work. So what are the things you need to look at in a kirana shop to understand whether this guy has income or not, how stable the income is, right? Then you could potentially sort of, underwrite it. And I think that is where a lot of people has some success. I think predominantly this is the model you see today for lending to the MSMEs. But again, the problem here is that here also it is like very, very subjective, right? And as we are talking about, right, over lending is kind of a problem here also, because at the time when things are very good, you tend to be, because it's subjective judgment, you tend to be very bullish, and you tend to sort of give more loans than the customer can handle. So that is one sort of challenge in this particular model. So the third one, which is again we are talking about that fourth industrial revolution, right? That AI and ML and all. So is that can we use some of the data that is available and sort of underwrite it? And that is where a lot of fintech came in, and they were very focused on MSME. But again, if you really look at their underlying model, you would see that there is a lot of dependency on bank statement, on the credit bureau, and less on sort of alternate data, right? Even let's say today we are talking about the account aggregator framework that probably will get a customer 360-degree view, getting all sort of bank account. So we'll have to see how it evolves, because right now I think about some 30 plus players have got AA license, and I don't know how practical it would be for banks to sort of get integrated with all 30 sort of AAs. So we'll have to see that. So this is where I think a lot of innovation will happen, that which data is going to be more useful. Because, see, when you look at the credit bureau, credit bureau is obviously very strong in India, and they're very good indicator of how the customer is going to behave. But also there is inherent problem in the credit bureau, right? Because when you are looking at the past data and saying that because the customer has done very well in the past, it's also going to do in the future, it has its own fallacy in that argument. Because, somebody, let's say, have given them a 1 lakh rupees of loan, and the person has done very well. Now, the moment you upgrade the person from 1 lakh to 5 lakhs, this history is no more valid for you, because whatever history the person has shown on a small amount of money, and if you're relying on it, you are actually going to make a lot of mistakes, right? So I think that is where I think a lot of the caution that we're talking about, that we need to be very, very careful. That how do we sort of not only just look at the customer's past, how the customer has done, but also is what is the ability of the customer to sort of handle in the future, which is again going to come through probably some of those model that we could build using all of that data. And this is where I think this NPCI data could be very helpful, because account aggregator is slightly more complex, where you are trying to get a lot of bank account statement. But let's say, as we are seeing the trend, right, at least the small businesses also see through the QR code revolution, a lot of transactions are moving to this UPI mode. Okay. So if there is a UPI, let's say transaction data is made available at some point in time, it is not made available today. So you could probably ping a customer. I know Bipul is getting a cold sweat, because then it would be competition to credit bureau. But I think it could be a sort of very, very valuable sort of data point for the for doing underwriting for this segment. So I think this is where probably it will evolve more. But I think one last point on the risk is that if we look at all this sort of digital lending platforms, and the core argument is that by having X number of data points, you could really tell whether customer is going to pay or not, customer is going to default or not. The basic fallacy here is that ultimately customer, you need to have some sort of a deterrent for customer not to default, right? Only underwriting to understand with the data, it is probably not going to work. So always you have to have the last mile collection, where the collection guy has to reach the customer at that appointed date and sort of say that, yes, I want my money, right? So I think, while we are focusing a lot on the underwriting through digital channel, through the AI and ML sort of an algorithm, unless the collection question is answered, I think we will not be able to sort of fully, address this problem.
Fair enough. I think you kind of balanced our enthusiasm. little more to say that be cautious. Vipul, just to extend his argument on past doesn't predict the future all the time, right? Score alone may not be enough. So what are some of the stuff that you guys are doing, right? Especially on new data sources, right? Does it complement, add more? Because I think a lot of argument is that it is not just alternate data instead of this data, but it is this data plus alternate data, right? So what has been your view on that, and how is that going to?
So first is
फिरोज और मेरी एक one-on-one meeting इसके बाद बनती है.
And just to clarify, NPCI doesn't own any data. Abhishek was shaking his head. But he said, if I get NPCI data, Abhishek was like, I don't own any data, right? So
Correct. No, so I will answer your question slightly differently, right? And I'll answer some of the questions of Feroz, and one point which Raviji made earlier about the FOMO in the digital lending space, right? I want to first ask a question to the audience, right? Which two cricketers made their international debut in 2017? I'm going to speak about 2017. It's specific for a reason. I'll answer it for you. Shreyas Iyer and Mohammad Siraj. Both of them played for the World Cup this year. We know that. They made their debut in 2017. Two more things made their debut in 2017. Ecosystem specific for MSME. One is CIBIL MSME rank, CMR, which I spoke about earlier. That's not something that I want to speak in this response to yours. The third thing that I want to speak about is GST. GST made its debut in 2017, right? And since then, we all keep hearing in different shapes and forms how GST has been progressing. I want to show two more nuances to GST, which is typically not in news that much. GST taxation system is now made mandatory to be filed at an invoice level. So earlier it used to be a bulk monthly kitna sale hua utna tax file karo. No, not anymore. Invoice by invoice, how much sale has happened. That threshold has dropped from 500 crores turnover required to be filed. 500 crore turnover or more are supposed to file invoice level in 2020 to 5 crore in 2023. And the goal of the GST Council is to take it down even further. Our estimate says that we will have 300 crore invoices in a year in next 2-3 years time. So, question number one to answer your point, all of us sitting here outside need to have the capacity to handle such transactions if we are able to be truly lend in the digital space, right? Now that's just I spoke about GST as one example. Similarly, we can speak about, and GST today is available on API for bankers too, and everybody in the lending ecosystem to take advantage of. Similarly, bank statements on what account aggregator, right? Or the PDF through the ML AI route of being able to read the bank statements on PDF. ITR is available, credit information is available. The way I see all of this is that
These are all building blocks. So I again want to take an example of a Formula One race. Think about it, you have been given the best tires, best gearbox, best engine, best brakes. And all the lending institutions are Ferrari, McLaren, Red Bull Racing, all the teams, right? Everybody has got the components. Time to build the best Formula One car and lend. I am again going back to the retail way. All of us today can digitally do a lot of things on the retail side of the house. The same has come for MSME. And this is to Raviji's earlier point. Everyone is trying to build that stack. He is absolutely right there. Everyone is trying to build that stack. In that process, some are failing, some are learning, some are ahead, some are behind. But it's a journey that has to happen. It's a journey that has to happen. All of us have to keep leveraging based on that. It's just a start of it. FitRank that I just spoke about is CIBIL's initiative to look beyond credit information. To Firoz's point, can I look just beyond the past repayment behavior? It looks independently how the GST turnover sales have been increasing, reducing. It looks at credit, debits and some, credits, bank statement credits, debits coming in. What's the response on that? How the UPI transactions are happening on the bank statement, right? It's our aim towards to be able to look towards it. So I'll summarize my point. A, there is an influx of digital information which is available now. All of this was not there 5-7 years back. MSMEs can benefit in that space, right? B, technology has to be ready. Technology from the standpoint of capacity and the technology from the standpoint of capability has to be ready. And C, all of us have to learn doing credit decision or finding new customers, the traditional way to lend on this new information available today.
Just to add his point, like today's world now is changing so fast. Now banking is not only a banking, it is customer experience also. When he's talked about, Mr. Tyagi talked about the end-to-end platform, right? From the origination till disbursement. From origination means in the underwriting space, how do I know this customer? Whether I can see when you're undertaking the guy who's sourcing a guy, can I get the complete information, photograph or videos, geotagging, all those information, till the disbursement, which account I'm tagging, where it is going to the right guy. In the same line, when it is GST or anything, the entire banking ecosystem can be integrated with the, maybe Tally has 70% of the financial invoice and other stuff where they are, if you integrate that with the banking, it happening, we have done that. In the same thing, all the ecosystem it integrate, then all this, the government initiative saying that, boss, whether it is all the GST has to be submitted, it is a click of a button. So I think the way the economy is going and the technology is changing in our system now, I think we will be much ahead of any other countries in the world.
Absolutely. I mean, I was in a mall last week and the mall parking, I don't know if you, that is attached to FASTag. So, I mean, the way things are going, I think everything is going to be from our bank account directly. So with this, I'll open up the floor for questions to the panelists.
Sure. Can I go?
Yeah. If you could just say your name and
sure. So,
you want a mic or?
Yeah, no, I'm loud enough.
Sure, thanks.
My name is Nirmala and I work for Women's World Banking. So my question is, I have actually two questions if I have liberty. First question is for Ravi sir. So how do you see the role of credit guarantee in terms of unlocking more credit, especially when we heard Vipul that the new to credit in the bottom of the pyramid is actually opening up. So how do we see there, and any measures which SIDBI/CGTMSE should be taken to push that?
Yeah, so I'll answer that. So credit guarantee corporations, again, that's one more thing. It's not PDI, but actually, these are two institutions of the country, CGTMSE and NCGTC. Both are managed by SIDBI, and they're one of the biggest guarantee corporations worldwide in terms of number of guarantees and even the corpus and the AUM that they're doing. And again, it's a very, very big enabler in system. All this 10 lakh rupee loan by NBFC, which you're seeing a spurt, they're all covered under CGTMSE. So there was, and government has got, I would say, experienced and braver with guarantee corporations now. So when the emergency credit line happened, you know, that was the time, it was a defining kind of moment for the Indian industry. There could have been, it could have just gone down like a lot of countries and would have taken 1 year, 2 years to recover. And at that time, Government of India gave that emergency credit line and it was 100% guaranteed by Government of India. And you know, the losses have not been to the extent, though government guaranteed 100% and that gave lenders to give out money. And then they realized it actually didn't matter. So, you know, that's one typical thing, because all these good models, GST, bank statement, they're all happy journeys. Even if once you see some problem, they'll not give money. That's another side of it which we should understand. It's, a lot of cases will get rejected with small kind of things. And that's where, you know, the banking real wisdom and judgment rise. Sometimes there's a problem with the customer. Now all parameters are indicating there is a problem. But you have to give money, and that's where, you know, guarantee corporations have helped. So when there were small loans, no collaterals were there, people didn't want to give 10 years ago, 15 years ago. So SIDBI brought this CGTMSE and loans up to 2 crores now are covered. So bankers just started lending, and most of those loans are doing very well. So now every bank is using a 2 crore, up to 2 crore loan, they lend very aggressively, which has led to growth of this segment in the country. So guarantee corporation, apart from being a credit enhancement in the lender's risk book, it enhances the credit risk score profile, PD, everything, because not PD, but you know, loss given default and everything. But what it has done is now, I would say it's helping growth of new segments. So now today GST Sahay, invoice-based financing, credit guarantee is bringing out a special product for that. Otherwise, you know, it will encourage lenders to lend using this new protocol. So the credit guarantee are definitely very big. CGMFU is being used. I think micro loans are being given under that. So it's huge enablers they can get better. And recently there was a meeting in Government of India how to give loans to large manufacturing, like loans of 50 crores. Because today a lot of companies want to move to India and, you know, they want to set up plants and they find difficult to raise loans from domestic banks. Let's say a Taiwanese company coming and setting up shop and trying to raise Indian loan from Axis Bank. So they, you know, it's not so simple. So if there is a sovereign guarantee or a credit corporation guarantee for those kind of things also. So they are very big enablers, very good for lenders. The experience in India has been good with both NCGTC, CGTMSE. They are digitally now connected to the lenders. Guarantee claim process is very fast. It's not like there's no uncertainty of that. So very big enablers.
That we had the mother of all stress test events, pandemic times,
Yes.
and the credit outstanding in the MSME segment did not shrink. It rather increased because of the guarantee schemes launched at that point of time.
And it saved everybody. So sometimes, you know, it's just, it also gave the signal to the lenders that sometimes risk is much more in your mind. Because, you know, you took extra risk, you wouldn't have taken that risk, and then you realize that 80%, 95% of the portfolio, we didn't even go to the guarantee corporation for a claim.
You know, as a banker, it's like how you handle that customer, no, in the difficult time. That
True.
matters the most. Like
True.
ECLGS scheme is actually made that difference.
Absolutely.
And when we launch ECLG, everybody's in a mind that what kind of a percentage of risk will come there,
Yes,
and everybody's that what guarantee the government is giving the value may not be sufficient to cover the risk. So I think it's gone reverse. I think it's every portfolio on the lending MSME side, it's behaved better than what it used to be before. Yeah.
You had one more question.
So, first, the answer to your first question, I don't have. And the reason behind that being that CIBIL works on data submission by banks, right? And the data submission comes in a predefined format approved by banks and RBI. In that, for the corporate lending, gender is not a data field that we can capture. So we don't have that split to be able to answer that. However, similar study on the retail side is available. That's there on our website that you can refer to. That women taking retail loans, what's the proportion of them, how's their performance versus men, right? And all of that is there. That can get referred through our website, right? The answer to your other part of the question is that applicability of CMR, FitRank, and other things in the bottom of the pyramid segment. See, CMR is applicable to anybody who has taken credit. Today, 80% in terms of volume, the CMR is actually applicable to the micro segment because they make up most of the number of loans given. So they are applicable. The other point of your new to credit segment, right? And the applicability of, so FitRank is practically applicable to all. In the new to credit segment also is FitRank applicable, and I think that's a question that you asked Ravi ji also partly, right? FitRank is SIDBI's and CIBIL's joint product that while I spoke about it, but it's actually SIDBI's product that, you know, CIBIL and SIDBI are working together on. It works not only on the companies which have a past credit history, but also on the ones who do not have. Because to what Vijay ji was saying earlier, that while current accounts are 10 crores, but the bank statements are actually 1 billion plus bank statements on the savings account. FitRank can actually work practically on all of them too. So it's widely applicable from that perspective. Thanks.
See, one of the initiatives as a bank, what we have taken today, renewable energy. When you look at this MSME want to use it, we can cut down the cost. When you ask the MSME guys the knowledge of renewable energy, how we want to plant that knowledge is very, very limited. Only somebody is who has a great knowledge and he can consult and give it. So we are partnering with another organization who has a great knowledge on those segments, and we fund those segments. So basically, consultant who gives the how he can install this all solar panels and what kind of a net metering will come. So what kind of a benefits are. Because normally what happens, the people don't understand what kind of a capacity he has to build. I think one of the aspects we try to reach out and do that aspect.
Yeah, so you're right. I also mentioned that this knowledge of understanding, first of all, so many plethora of products being there in the market and not being available. It's not so easy to get a first loan unless you're part of some ecosystem of JLGs, SHGs. That's a different thing. So different institutions. You're right. It's not a very I would say organized drive. For example, what NPCI did for UPI or